Okay, so I recorded the day one of the boot camp this morning, saved it to the cloud, and it seems to have disappeared. So I'm re-recording. Going to cover everything that we covered on the session this morning, and then I'm going to place it in Discord and other places. So I'm going to share my screen, and you should be able to see uh, the overview that I published yesterday. So these are the subjects that I want to cover through the week. I'm not necessarily going to cover them in that order, but I will cover all of the points. And if anybody's got any questions, you can either send them to me or you can jump on the call and ask them live. I know that this morning we covered the background, the basics of the strategy. We looked at trading plans, risk to reward, risk rate, and we just skirted around accepting losses. I'll cover that in a bit more detail. And we'll look at all of these other things on a later date. So I'm going to share my trading view screen. And if you bear with me 1 second, you should be able to see my trading view chart for GBP USD 15-minute. But before I get into that, I'll give you the little bit of background that I gave this morning. I believe it was in 2020 that David Kahn introduced a strategy on which this is based. He called it Down Under. And the reason for that was it was all about the handover between the Asian market in Sydney and the London market in the UK. And he had noticed that there was generally some kind of price movement in the time period between 6 a.m. and 8 a.m. UK time. And I got involved with that strategy. I followed that strategy almost every day throughout lockdown, which is why I remember it was 2020. And then a lady called Anne Armitage, who lives in Canada, uh, had a look at it and thought, I wonder if that'll work in the handover or the crossover between London and New York. And she back tested on the Euro USD, GBP USD, and the Canadian dollar pairs as well. And she had a lot of success with that. And then, for reasons that I'm not aware of, they both stopped doing live sessions using Crossfire. So Crossfire became the name of the strategy from the Asian London market and from the London US market. And it sort of disappeared for a while. I took a look at it, revisited it later, and I did a lot of back testing. I discovered that whilst I had reasonable success whilst following the original strategy to the letter, I found I could improve my results if I dropped down a time frame or possibly two time frames, and I could get tighter entries, earlier entries. And just to mention two other people who've helped to develop the strategy or help me to develop the strategy. The guy called Jeff Goodwin, who came up with a strategy called V70, which I used to teach in this group a while back. And that involves looking at previous points of control using an indicator called volume profile. The other person that I want to mention is Kevin Orme, who also is a big believer in the volume profile as a way of determining what price might do in the future. So they're the four people that helped me to develop the strategy to what it is today. My background really is that I was involved for quite a while in various online marketing, online businesses with varying degrees of success. I met Paul at an event a while back, about 4 or 5 years ago, and started looking at forex trading. It was again that it was lockdown that encouraged me to start looking at forex trading really seriously. And then I got involved in this Crossfire. So that's my story. That's the story of Crossfire. Let's move on now to the basics of the strategy. So I'm recording this at on Monday afternoon at 10 minutes to 2 in the UK. So we have an opportunity to look at the 1 o'clock candle, which is where we begin when we're doing Crossfire in the afternoon. So I'm going to move this back to 1 o'clock. So I'll leave the 1 o'clock candle on and I'll stop at the 13:15 candle. So there we are. That's as if we were looking at the chart at 1 o'clock. We'd be looking at the chart at 15 minutes past 1 in the UK. And this is the 1 o'clock candle, which is literally just closed. And what we do is we put 2 trend lines. I'm just outlining the basics. I'm going to go into everything in much more detail throughout the week, but I'm looking at just the basics of the strategy, which is the 1 o'clock candle. When it closes, we look at the top of the wick of the 1 o'clock candle. We look left and we look for the nearest higher candle. So right now I'm looking at that top of that candle there. When I look left, I can see that that candle there is the nearest higher candle. So what I do is I put a couple of trend lines on. I use the magnet tool, which helps me to place the trend line. So I take a trend line, go to the top of the 1 o'clock, I look left, and I need to be on that candle there. And I extend that. I'll extend it to around about 6 o'clock this evening. And I drag it down so that it touches the top of the 1 o'clock wick. And I just looking a bit more carefully, that's fine. I'm going to change that to a green color. And then I do the same from the bottom of the 1 o'clock candle. So there's the bottom. There is no wick on the bottom of that candle. So I look at the bottom of the candle, I look left, and I notice that this is the nearest lower candle. So I'm going to get a trend line. I'm going to attach it to the bottom of the previous candle. I'm going to extend it to around about 6 o'clock this evening. And then I'm going to move the chart so that I can get that. Now, what I need to do is to get this trend line to pass through the center, looking from left to right of that candle. So it needs to go where the wick would be if there was a wick. And that's exactly in place. I need to change the color of that trend line to red. So we're all set up. We do exactly the same on all 4 pairs in whichever session we're doing. We just repeat what I've just done then. Ignore this for now, ignore the fact that I've got yesterday's POC. I'll talk about that more later. First thing I need to do is to knock off the magnet tool, because you'll find if you leave it on that it does interfere with anything else that you're trying to achieve. Now, if I drop down, you'll notice that I set up the chart with the trend lines on the 15-minute candle. I'm going to drop down right down to the 2-minute time frame. And if I right click on the chart and reset, that is what I see on my screen. So it's exactly the same as it was on the 15. It looks different, but it's exactly the same setup. And the first rule to follow when you're looking at Crossfire is you have to decide whether price is above the green trend line or below the red trend line. And as you can see, it's actually below the red trend line. There's the red trend line. Price has come down below it and is starting to move sideways. But because it's below the red trend line, I'm only looking for sell opportunities. Now, as you're looking at that situation now, you don't have much of a clue as to when or whether or when to get in for a sell. So I use some additional indicators. I use 3 indicators actually. I use straightforward Forex, which I'm putting on now. I'll leave the others for a minute. Basically, what we've got is the straightforward Forex indicator. The most important part of that indicator is the wave down here and the wave up. Now, we've just said that we're below the red trend line, so we should be looking for sells. However, we are in a wave up situation right now. These are the wave blocks. They got bigger and bigger and bigger, and they started to get smaller now. But we are still in a wave up, and we've still got green piece arse pushing price up. So that is contradictory. We're looking for sells, but we're still in a wave up. So basically, we have to wait. Now, there are a couple of other indicators that I use to help me make my entry decisions. This one is called the Wada Ata. There are two versions of this. I'm using this. This is the simplest version. I quite often use the other version. It's just a question of presentation. But basically, it comprises three components. You've got the red line there, which it indicates the dead zone. If these histograms are below the red line, we are definitely in the dead zone. We have to wait until the black line, which is the explosion, we call the explosion line. The black line needs to be above the red line. It needs to be moving away from the red line. And we also need the histogram to be above the explosion line. So we need to be out of the dead zone. We need to be moving away from the dead zone. And we need a nice dark green histogram above. So that candle there was indicating, this indicator was indicating that we should be looking for a buy, but we can't get in for a buy because we're below the green trend line. We can only look at getting into a sell because we're below the red trend line. So we just have to wait. There's a third indicator that I use on making entry decisions, and this one is called the 5-13-62 clouds. And you can see that we've got, well, essentially we've got four moving averages now. We've got the 200 moving average, which incidentally is pointing down. So that's backing the idea that we should be looking for sells. We've got also a red line, a blue line, and a green line, and they are the 5, the 13, and the 62 moving averages. Now, just to recap, we're below the red trend line, so we should only be looking for sells, but we've got a wave up, and this Wada Ata is all buys, although it is weakening. I read that as buyers stepping down, stepping down, stepping down, stepping back, and it's underneath it's in the dead zone. It's underneath the red line, so it's indicating that we might be getting into a sell quite shortly, but we need to wait for a wave down signal. So we need to wait for a big red triangle, WDN, and then we'll be more comfortable getting in for a sell. There's a couple of other indicators that I use, but I use those indications for to decide on my stop loss and to decide on my take profit. So more of that in a minute. I'm just going to move things on slowly. And there we go. We've got a nice wave down candle. We've got a wave down indicator. We've got a red candle going down. So this candle, when it finished, would have become a wave down. You see that the wave blocks have changed from green to red. You can also see that the moving averages are now all pointing downwards. That's the 5 moving average, that's the 13 moving average, and that's the 62 moving average. You've got the 200 up there. So now we've got a different scenario. We've got all the indicators pointing towards a sell. So we're looking, we look at the Wada Ata and we see that candle there The explosion line was moving away from the dead zone. It was on that candle, but on the current candle, it's having a little bit of a pullback. We've got what looks like an indecision candle there. So things are looking good for a sell, but I wouldn't get in just yet. There's this dashed line here is part of straightforward forex indication, but it is indicating that low there is represents a break of structure. So we need price to get below that break of structure point before we would get in for a sell. What else do I need to talk about on that one? I think we'll just move on a little further and see if it breaks that there. It's now broken past that break of structure line, but it's actually now going back upwards. So a little bit of contradiction. We are now, well, we're below the red trend line, number one. Number two, we are in a wave down. Number three, we have got red PSARs pushing price down, but currently price is trying to get back up again. And this Wada Atta is saying stay out. Let's move it on a little bit further. Let's leave it on for a while. Okay, so I'm going to stop it there. We got a wave up. So that when that candle closed, that indication would have appeared. And then that was an indecision candle. And then we got a wave down. So at the end of that candle, we've got a wave down. We are below the red trend line, but we've still got green PSARs. We need the PSARs to be red and above the current price before we get in. Now, to start thinking ahead, because we're looking as if price might decide to go down, we might be getting in for a sell shortly. So at this point, I start to think about, well, where would I put my stop loss? Well, the straightforward Forex indicator gives us stop loss suggestions, and I can see one there. You see the top of that candle there? It's got a red line coming across from it, and that's indicating a suggested stop loss. There is a second suggested stop loss, and that's the top of this wave down candle. So it's there. So before I think about getting in, I'm going to measure how many pips there are between current price and that red line there. And I'm seeing that there are 9 pips in that. And if I move it down to the top of this wave candle, we've got a tighter stop loss, 6.4. So if I was thinking about getting in for a sell, I would have a 6.4 stop loss. I know price is going to move slightly before I get in, but it's roughly 6.4. So the other thing that I'm thinking is, well, where am I going to set my take profit? So let's put an imaginary short position on this. Let's say I'm getting into, if I got in now, I'll be getting in too early, but let's just do this as an exercise. So I'm putting my stop loss up to the top of that wave down candle. It's saying 6.6 pips. I now need to look at where's my take profit going to be. Now, I only ever go for a trade that has a good chance, a reasonable chance, of giving me a risk to reward of 1 to 2. So I need to drag this down until I've got a number 2 here. Can move it up a little bit. So there we are. We've got a risk to reward ratio of 2. So that means I'm risking 1% to make 2%. I'm risking 1% if I lose. I'm losing 1%. If I win this trade, I'm going to gain 2%. That's the kind of trade I look for. Now, I do a bit of a sanity check. I go to a bigger time frame. I'm going to 15 minutes, and I'm going to look left. So I'll take the Wada Atta off because it's a distraction. Let's just have a look left and see if it's reasonable to expect price to come down here. Now, the yellow shaded area that you can see on your screen is actually an area of imbalance which goes back to this point here. That candle there, if I can make it slightly bigger, that candle there from that was Thursday of last week. There is some imbalance there. It's a little bit more than is indicated there. It starts up there and it goes down. So from the bottom of that wick on that candle down to the bottom of that candle is an area of imbalance. There is an indicator that you can use to show imbalance, and sure enough, it's not showing it on this occasion. It is a good indicator, but you have to use your own eyes as well. And I'm seeing that there is definitely some imbalance from the bottom of that wick down to the bottom of that candle, and price will have to go down there to mitigate that imbalance. However, if you want further reassurance, there's another area of imbalance here on this candle. That imbalance has already been taken out there, but this imbalance is still outstanding. So there is a reason for price to go down to that point, purely for imbalance purposes. So if I was getting into this trade and expecting price to go down there, I'd be slightly nervous because price might come down and touch the top of that imbalance and then reject, or it could go all the way down to where my take profit is. So let's move this chart on a little bit further and see what actually happens. I've got no idea, to be honest. I didn't look at the chart before I moved the bars back. So if I take move it forward slightly, and we'll see what happens. So this candle is the 2 o'clock candle. We're on the 15-minute chart, so that's the current candle. If we drop down to the 2-minute chart, there'll be some additional candles, but you can see, take off the imbalance, you can see what's happened here. Price has gone in the opposite direction. I was expecting price to come down and either bounce off that or break through it. And I did say that was too early to get in. We are below the red trend line. We are in a wave down. We got, at that point, we had red peace out, but we still got, at that sort of fictitious entry point, we still had green PSARs, which is why price has gone back up, and price has just moved sideways. But what has happened is it's gone back to retest that green trend line. It may well go back to that black line, A, because it's a 200 moving average, and price very often bounces off the 200 moving average, and B, because we've got yesterday's POC at the same point. So there's two good reasons for price to go up to that point. It may well go up to that point, do a retest, as we call it, and then start to make its way down. Now, we've currently still got green PSARs. That's the worrying thing. So when I place this short position box here, I did say that we would be getting in too early if we got in at that point. But I've gone through the process, my thought process of when to enter, where to place my stop loss, and where to place my take profit target. So I've done what I set out to do. I'll keep an eye on this. I suspect that when these PSARs get above the price and when we've got a new wave down, we'll start to see some downward movement. But I don't know. Nobody knows what price is actually going to do. Let's have a look at, I wanted to look at GBP AUD, which was a pair that I had a lot of success with last week. So I'll go back to the 15-minute chart. I'll go to GBP AUD and I'm going to go through the entire week and really briefly explain my reasons for getting in, my reasons for setting the stop loss, and my reason for setting my take profit. So we need to go back to last Monday. I'll reset that chart. If I right mouse click on there, and I can reset the chart and then go back. By the way, these vertical dashed blue lines represent the start, the end, and the start of a session. So this was the start of today's session. It's actually saying Sunday the 11th at 10:15 in the evening. That candle was Friday night, Friday evening at 21:30, 21:45. So that's what we call the session break. So that's going back to Thursday. I just want to go back to Monday. So there we are. We've got Monday there. And if I just manipulate that and see if we can get a better view. So go to actual size. And this is Monday. This is the one I'm interested in. So this is the session changeover. That was Friday evening. That's Monday morning. Well, it's actually Sunday evening because the Asian market opens 10 p.m. Sunday and continues throughout Monday. So here is the trade that I got in. This is an actual trade that I took on Monday, the 5th of February. I've marked, this was my entry point on that candle there. I know I'm looking at the 15-minute candle. I should actually be looking at the 2-minute chart, but basically there's the green trend line. So we're above the green trend line. We should be looking for buys only. We don't look for sells when we're above the green trend line. These candles are this is what we call consolidation. Price is barely moving at all. On that candle, price did make a move upwards, and it crossed over the 200 moving average. I actually need to get back to the 2-minute chart. So where are we? Let me just reset that chart and come back. So that's Monday the 12th. I need to be way back at Monday the 5th. Bear with me. I don't know a better way to do this. So that was still Friday the 9th. We just need to keep going back. If my computer will keep up with me. Come on. Thursday. Actually, I do know a better way to do this. If I click on that calendar and go back to the 5th, it will take me back to the 5th. It should do. There we go. But I seem to have lost my... I knew there was a reason why I didn't do that before. So this is actual size. So this is Sunday, we're into Monday. Because we're a bit early. We're coming to it now. There it is. I just need to get this so we can read it. And so my entry was actually on that candle there. So that was 26 minutes past 7 a.m. So I've marked the chart up at 6:15. Price just moved sideways. We got into a situation here where I started to become interested because Price is above the green trend line. We've got a wave up indication. We've got green PSARs pushing price up. And if I put the water ATA on, you can see that I had marked that with a cross there because the water ATA wasn't telling me to get in for a buy. It was telling me to keep out. I actually placed that to remind myself why I didn't get in at that point. The reason I got in at that point, and actually with hindsight, I realized I got in a little bit earlier than I should have done because the explosion line wasn't quite above the red dead zone. The histogram was really strong. So I was a little bit naughty in that I got in too early, but on this occasion, it worked out for me okay. I would have been better. I just move that up. I would have been better waiting for this candle, and probably even yeah. Well, that those two candles there, that one and that one, that's how I like to see the water ATA. This was the better one because the explosion line is definitely moving away from the dead zone and the histogram is above the explosion. So that would have been the better, safer entry. But in reality, I jumped in a bit too early. But I got away with it in the sense that um, it it didn't go back into well. You can see I got in at the top of that candle there, really at the top of the wick, and then it sort of started moving sideways. So I would have been better waiting until 8:02, but in fact, I would be getting out at 8:02 because it hit my take profit. Now let's have a look at the stop loss situation. If I move that up there, so I set my stop loss that level there. So that was the bottom of that. You can see that wave up candle. The bottom of the candle, not the wick, but the bottom of the candle is in line with my stop loss. So that's why my stop loss was 7 pips. Therefore, I need price to go up 14 pips. If I look left on a higher time frame, just do a right click and reset that chart. So where are we? We've lost our place. Computer is behaving really slowly. So we're back to, we've gone too far. So that's Monday the 5th. That's the markup on, this is on a higher time frame, but it allows me to look left. So that was when I got in on Monday the 5th between 7 and 8. If I look left, can you see what I can see? There's lots of imbalance here. Let's try and be a bit more accurate. So I'm aiming for this level. That's my take profit. So that level there, yes, there's imbalance here. Can you see from the bottom of that wick down to the bottom of that wick? Well, to the bottom of that candle, there's definitely some imbalance there. That one's already been taken out. But there's definitely some imbalance just above. That's my take profit. So just at that point there. So that was my reason for getting in on that one. I'll very quickly do another. As I say, I took four winning trades last week, all on GA. So this is Tuesday. And again, we're on the 15-minute chart. I'll stick with the 15-minute and just go through it. So here, again, this was 8 o'clock. So that was an 8 o'clock candle and it started to make its move. Now on the 15-minute, we've got a different perspective here. We really do need to go back to the 2-minute. So let me try that. And here we go. Oh, no, 2 minutes. And go back to the 6th. See if that works. Right, the 6th of February. And that's the beginning of the day. We need to get up to 6 o'clock. And actually need to be at 8 o'clock. So there's my long position marked up. There's my take profit target at 1 to 2, just over 1 to 2. So I'm looking left from that point there, and I'm seeing imbalance. That candle, let me just move that out of the way. From the top of that candle there down to the top of that wick there. So I've placed that yellow shaded area quite accurately there. There's an area of imbalance where all that movement was downward movement. That was price manipulation, and it has yet to be mitigated. So let's just try and get my long position in view. There we go. So that was the reason why I thought price was going to go up, and indeed it did. It went right up to the top of my long position box. It also went even further. If I'd stayed in that, price actually went up there, which is 1 to 4. I actually came out at 1 to 2. And that happened on Wednesday, it happened on Thursday. I'm just going to move to Friday because there's a point to be made here. If I reset the chart and I move to Friday, so and if I make this a bit easy to read. I'll take that water atta off, make it a bit easier. So on Friday morning, I marked up GBP AUD and I didn't take a trade because the move came after 8 o'clock. There was a smaller move there just before, well, just after 7. There was a smaller move down, which began, well, it was in a wave down. On the 15-minute chart, we were always in a wave down. From that point there, you need to drop down to the 2-minute chart to get a real idea of why I got in. But can you see that the big move, which I missed, was after 8 a.m. But I've been watching the chart from 6 a.m. and I got to 8 o'clock and I literally got bored. I missed a really good opportunity. Let's drop it down to 2-minute chart and get back to Friday. So Friday, that's Friday evening. Need to get back to about 8 o'clock in the morning. Here we go. We're getting there. I can take that off. So 7 o'clock. I'm gonna right click and reset that chart. Hopefully it doesn't all disappear like it has done. So we're on Friday here. Okay. try and make it easy to read. And if we look at when I started watching the chart around about 6 o'clock in the morning, price was just moving sideways. It was still in what we call no man's land. It was between the green and the red. So I wasn't interested. I would have got interested at 7 o'clock. But I think if I look at the water atta, you'll probably find that at 7 o'clock it wasn't ready. The black line was below the red line. So I wouldn't have got in for that move. The earliest I could have got in if I'd been patient and waited, price was below the red trend line at 8.52. We were in a wave down. We had red PSARs. This was looking good. It looked better here. Personally, I would have waited until the price dropped below the green trend line and then we're all clear. So I would have got in on that candle and I would have made some pips out of that move there. If I stayed in, I could have got a few more pips. But that was a missed opportunity. So I did take 4 winning trades on this pair last week. And if I'd been more patient, I could have taken a 5th trade there. So I'm going to go back to Euro US. No, I won't. I'll go back to GBP USD. I shall reset that chart and just see what's going on this afternoon. This is live. Right, so I did mark this up, but when I marked it up, I did say that I wouldn't get in at that point. I wouldn't actually get in. It was too early because the water atta was not in my favor. This has changed since we looked at it last. We are still below the green trend line, therefore we cannot get in for a buy. We can only get in for sells when price is below the green trend line. Because whilst price is still below the green trend line, you're going against the trend. You need the trend to break, and you need it to break past that green trend line. Now, it has made it past the green trend line. It's struggling to get past the black line, which is the 200 moving average, and by coincidence, it's also yesterday's POC. Now, we'll talk more about POCs later, but that is a very strong, A, it's quite a strong magnet for price to go to, and B, it can act as a barrier to stop price getting above it. It might break through it, it may not, but let me just read this chart again. See if you can see what I can see. We're below we're definitely below the red trend line, so we should be thinking sells. We're also below the green trend line, so we can't think about, well, we can. At the minute, we can start thinking about buys. We are in a wave up. We've got green PSARs pushing price up, but these wave blocks are quite small, and you've got these 2 lines as a potential barrier. Looking at the water atta, it's looking good. The histogram needs to be above that explosion line. So the buyers have sort of been pushing upwards, and then they've started to step back down again. So price will reverse, and basically it's bouncing. It's gone up there to test that 200 moving average, and it's also testing yesterday's POC. The POC is an area where we get a battle going on between the buyers and sellers, and the sellers, the people who place quite substantial amounts of money for price to go down, are saying that that's a line beyond which they're not going to let price go above. So they're actually placing more selling trades at this moment, and they're trying to push price down. So the more sellers you get in the market, the lower the price goes. It's the same with house buyers, house sellers. When everybody's selling the houses, the price of houses goes down. And that's what's happening with this pair right now. We need to wait. If we were going to get in for a buy, we would need to wait for price to get above that line. and if we were going for a sell, we'd have to wait for the wave up to change to a wave down, and for the PSARs to change um, to red above the price. So I've given you a quick insight to the basics of the strategy. We're going to go into much more detail of all the indicators that I use. I'm going to give you all the settings that I use, and then you'll be looking at the same chart as I am. If you've got um, even if you've got these indicators on your chart, unless your settings are exactly the same as mine, you'll be seeing a different picture to what I've got at the minute. So I've got, move this out of the way. There is a workbook. So if you are in our Discord channel, you should be able to see this workbook. I'm not sure if you can see that now. Bear with me one sec. Yes, you've got it on your screen now. So that is the workbook. It's quite a long document, but most of it is made up of charts. But you need to make your settings the same as mine. So all of my settings are down here, and you need to take the time to get your settings in the same situation. So if you're watching this replay and you're planning on joining tomorrow's bootcamp, it might be a good idea to have a look at your settings. Let me just go back to Crossfire, just check that you can see this. Yeah, you should be back on my trading view chart for GBP USD. We're looking at this is actually now it's 14:33 UK time on Monday, and this is the 14:32 candle. It's a 2-minute candle, so there's 32 seconds left on this candle. There's nothing going to tempt me in for a trade on that. I'm going to spend the last few minutes of this session talking about trading plans, and I'm going to use what I did on the original video this morning. I think I was on Euro US. And let's just have a look at this. So we've got the 15-minute chart. There we go. That's what I was looking for. There we go. It's all there. It's just got lost. So I was talking this morning about my trading plan. I'm trying to move that out of the way, but anyway, see if I can move this one. Yes. Okay. So if you just ignore the chart, let's see if we can take that off. I can hide that. I can take this off. Okay, so that's a bit easier to read. I was talking about my trading plan. This is my own personal trading plan. Everyone's different. Everybody has different likings and dislikings. You have different times of day at which you can trade, but this is my trading plan. I would suggest really strongly that everybody draws up an outline trading plan and sticks to it until you got it nailed down. So my trading plan is I go for 2% account growth per day, and I achieve that by most days by just one trade per day. I do a crossfire trade. All my trades are crossfire trades. I prefer the 6 to 8 a.m. slot for my trades, although as you just demonstrated last Friday, there was a big move after 8 a.m. So it might be an idea to extend that 8 further along. Mind you, if you've got a trade before, you don't need to take the 8 a.m. onwards trade. but sometimes the market is just pretty slow before 7. Maybe you get a move at 7, maybe you get a move at 8. But anyway, this is my preferred way of trading. It doesn't always work out, but the key thing, the key point I want to make is I only take trades that have a reasonable chance, a reasonable probability of giving me 2%. So if I risk 1% with my stop loss, so if you look here, this red area here represents 1% of my account balance, and the green area represents 2% of my account balance. I just move that up there because that's where the 1 to 2 is. There we go. So I'm accepting that if I lose this trade, I'm going to lose 1% of my account. But if I win this trade, I'm going to make 2% on my account. And those are the only trades I take. By looking left, I see if there's a reasonable opportunity. Now, this was this morning, Euro US, which is technically not a crossfire pair for the morning session, but I do get some success out of watching it. If I'm ever on the charts, I always look at Euro US. And if we look left, you'll see why I went down to that. Where are we? Put that back on. If you look left from where my take profit target is, you've got this area of imbalance. So it could potentially have gone, well, it did, it went further down. It went and took out all of that imbalance. So I was aiming for somewhere in the middle of that imbalance to get my 1 to 2. So that was a good trade for me. I could see that the possibility or the probability of price going down there was high because we had a wave down. We had red PSARs, we had nice strong wave blocks, and there was a reason for price to go down there. So let's have a look at these. Let me just move these out of the way. There we go. So the illustration I gave this morning was, because I'm always being asked, what is your win rate, Richard? And my reply is, my win rate has got no bearing on your win rate, because you may do things differently. You may jump in too early, too late, whatever. You need to practice, and get into a situation where you regularly can get 1 to 2. So you're risking 1%, but you're potentially gaining 2%. And the way I sort of answered the question, it's not just about win rate, it's about a combination of your win rate and your risk to reward ratio. So let's look at this box here. Let's say I take 10 trades and I've got if I only win half of those trades, so I've got a 50% win rate. That means I'm going to be losing 5, but because I'm losing 1% on each occasion, I'm going to be down 5%. If I'm going to win 5 and I'm gaining 2% on each trade, I'm going to be gaining 10%. So net, I'm going to be up by 5%. That's only winning 5 out of 10 trades. I would like to think that everybody following this strategy would get at least 5 to 10 and hopefully get more. And how the win rate affects your profitability is if you're on a 60% win rate, so you're going to lose 4 and you're going to win 6. Losing 4, you're losing 1% times 4, and winning 6, you're going to gain 2% times 6. So you're going to be up by 8% purely by transforming from a 50% win rate to a 60% win rate. Your net profit is increased from 5 to 8%. I'm really reluctant to quote you any figures on my win rate. I'll just end with the reason for that. This is Paul Turner's example. He'll say, when you were at school or at university or at college, and let's say there were 30 people in your class, you all got the same lessons, you all got the same textbooks, you all got the same exams. So obviously you're all going to get the same exam results, aren't you? Because you've all been in the same position. Well, the answer to that is no. You didn't all get the same results, and that's because people are different. So the fact that if I quote a win rate, it, absolutely no bearing on your win rate. So we'll look at win rates, and the last point I want to make is because the forex market is not controlled by the small. Well, it's not. we have no influence over the market. You have to accept that you're not going to win every trade. In fact, you have to accept that you're going to lose. And whether you lose, let's say, 1 in 3 trades, and you are on a 66% win rate, and I keep that figure in mind. If I'm looking at, if I take 3 trades, I can actually afford to lose 1 of them and still be in profit. If I lose 2 of them, then I'm in a slight loss. But I'm not. I'm not going to worry about losing 2 out of 3 because I'm losing 2%, and the next trade could make me 2%. So you've got to accept that you're going to lose some trades, and you've got to be in the mindset where you accept that you lose trades, and it's part of winning. Losing is part of winning. So I think I've covered everything that we covered on the original session this morning. I apologize for losing the recording, but you haven't missed anything. I've covered every point that I made this morning, except to say I did suggest that if anybody had the time to either look at the, well, yes, if they have the time, if you're within the group and you look at the workbook, which is in Discord, and if you could get your settings to reflect my settings, then we'll probably make a bit more progress tomorrow. So thanks for jumping on. I'm going to stop this session now, and I'm going to put the recording in to Discord as soon as I possibly can. So thanks for jumping on. I'm back again at 1 o'clock, 1 o'clock in the afternoon in UK. Thanks now. Bye.